focused on some pinpoints, and I'm not as deeply trained, for example, as you are on some of the detailed nuances of markets, right? And so then what I'll try and do sometimes is just step back and look at the organism as a whole and take in all those variables and say, okay, what is the mix of these variables suggesting? And so for me, we started to feel weird when really Solana was not getting that much of a bid from its DATs and then anticipation of its ETFs, right? So you kind of had, you had Sailor and the Bitcoin DAT bid, which then went into the Ethereum DAT bid. You also had the Bitcoin ETFs and the Ethereum ETFs. Those two, those events were phenomenal for Bitcoin and ETH. You would have then expected the similar events to also be phenomenal for Sol, which, for me has been kind of the high risk asset of choice this cycle, right? And you've focused on Sui, I focused on Sol.
The crypto market may make even the smartest question themselves. This is where we are now. This cycle defied most norms. Price action is slow, liquidity reads are unclear, correlations have dropped, and even seasoned analysts question if we missed the true impetus. You're not alone in feeling uneasy. Today's conversation between two of the industry's most renowned analysts, Raoul Pal and Chris Burniske, depicts that doubt brilliantly. One believes the next big shift is coming. The other thinks it's over. As many of you know, Raoul Pal wants a longer macro-driven cycle. He predicts a peak in 2026, 2 years after 2024. He's maintained for months that liquidity drives every significant crypto boom, and that this cycle's liquidity wave hasn't arrived. Even Paul, the bullish one, is doubting his time. Normal signal alignment is lacking. The traditional correlations are broken, and the market feels sloppy. We're in a peculiar time when the most optimistic liquidity analyst admits skepticism. On the other hand, Chris Burniske is methodical, analytical, and unafraid to express what many traders have been whispering for months. Maybe the cycle terminated in 2024. Burniske claims that the summer euphoria, the Ethereum rip, the ETF frenzy, the aggressive big pumps was the apex, not the start or warm-up. If he's accurate, this isn't a bull leg setup. A broad, grinding come-down is underway. Even if it's painful to hear, we can't dismiss it considering how complicated the last year has been. Today's video asks a simple but vital question. What if we missed the banana zone? Was the parabolic period everyone was waiting for already over? Burniske's caution merits serious attention before we move on to Raoul Pal's comprehensive liquidity framework and why he still thinks 2026 will be the blow-off top. If you want the whole picture, not just optimism or pessimism, watch until the finish. Please like, subscribe, and tell me where you stand in the comments before we begin. Before we watch the video...
Chris, good to see you back, my friend.
Thanks for having me on again.
Yeah, look, I mean, here we are. Today's the 13th of November. I guess this will come out a week later. And the market, crypto, Twitter, everything is kind of in turmoil, trying to figure out where the hell we are. So I think we'll start with that, and then we'll dig into the more interesting stuff afterwards as well, what else you're seeing. So how are you thinking through where we are in the cycle or in the markets or the structure of them?
Sure. As of today, Bitcoin's down about 20% from its highs, right? And so in classical finance, this would be a bear market, right? Within the crypto industry, it's Thursday. Either a speed wobble, or it's going to go further, right? And I think that we have to have a healthy amount of respect for Bitcoin just always being the center of gravity of what other crypto assets are doing, right? And so there's a lot of ways to look at this, right? And I think that's what's agonizing for people. And you and I are going to probably talk through different views here that we both know are probability weighted in our own minds, and we're both prepared to be wrong about those views, right? And that's where a lot of the nuance is lost online, because people either want you to be a bull or a bear, whereas I feel like every professional asset manager is always some combination of bullish and bearish, or bullish and paranoid, or bearish and paranoid, or whatever it might be.
Yeah, generally is if you have a pretty strong view, then your entire job is to be paranoid about that view. That's how I think of it.
Yeah. And so, in kind of the simplest framework where, and this is the 4-year cycle framework, then Bitcoin is in the process of topping if you follow that 4-year framework, right? And then you would expect a bottom about 12 months from now. And you could say that that's due to halvings, which I think it's more dubious as Bitcoin's inflation rate diminishes. And you really think about the crux of the halving argument and, the amount of coins that goes to miners and proof of work and the cost to produce Bitcoin and all that. So there's the halving argument, there's the liquidity argument, which you've done a great job of educating people on, and Bitcoin kind of aligning with 4-year business cycles, and then the liquidity cycle on top of the business cycle. This is where it gets tricky, right? Because right now Bitcoin is deviating a bit from the liquidity cycle, right? And so I think we have to acknowledge, for me, that is a point of paranoia, right? Where I'm like, hey, the liquidity cycle would suggest that Bitcoin should at some point here do very well. Right now it's struggling a bit, but I can't ever get too confident in that view because I know that I could get my face ripped off if I'm not allocated enough to the upside and, liquidity dynamics kick in. But I would say kind of for me, overarchingly, the reason I started to sound some caution, let's say, after really the 10-10 crash was the market was just feeling heavy to me. And there was someone who put a comment on crypto Twitter of, one way in which I look at markets is kind of as an organism. And I'm not as kind of like focused on some pinpoints, and I'm not as deeply trained, for example, as you are on some of the detailed nuances of markets, right? And so then what I'll try and do sometimes is just step back and look at the organism as a whole and take in all those variables and say, okay, what is the mix of these variables suggesting? And so for me, we started to feel weird when really Solana was not getting that much of a bid from its DATs and then anticipation of its ETFs, right? So you kind of had, you had Sailor and the Bitcoin DAT bid, which then went into the Ethereum DAT bid. You also had the Bitcoin ETFs and the Ethereum ETFs. Those two, those events were phenomenal for Bitcoin and ETH. You would have then expected the similar events to also be phenomenal for Sol, which, for me has been kind of the high risk asset of choice this cycle, right? And you focused on Sui, I focused on Sol, pretty similar.
I had Solana earlier on and then did the switch, but yeah, completely.
Right. But like just thinking of a high performance L1, great, core engineering, interesting ecosystem. And so then when Sol was heavy through the DAT anticipation and then the pipes getting announced and kind of the announcements of those vehicles, and then heavy with the ETFs, that started to feel very weird to me, right? It's like, well, there's not a bid here and there's clearly a lot of selling if Sol's not rallying. And then that 10-10 liquidation, I mean, the only thing similar that I've seen was March of 2020, the COVID crash, and you had assets, like I looked at the portfolio that day and, assets were down 60 to 90% on the day at a point in time. It was insane. And so what I didn't like about that was, okay, this cycle, there's been a lot of angst around really in the long tail, right? Where's the bid in the long tail? What's the fundamental value in the long tail? How do you value these things? I would say things that we have anticipated for a long time, right? Like the professionalism of valuing crypto assets, and you and I have both, been early to trying to figure that out. Well, it's coming now, right? And so the long tail's not getting a bid. There's an AI bubble, and then the 10-10 crash.
Every seasoned investor knows Burninske's framework. Machines don't behave like markets. His analysis of this cycle shows a market that peaked early, grew top-heavy, and has failed to find organic bids, notably outside Bitcoin and Ethereum. You can agree or disagree, but he's not emotional. His speech is structured. Solana not reacting to catalysts. Long-tail assets falling to March 2020 style wicks. ETF anticipation lowering returns. All of that supports his belief that this cycle's power plant may be dead. His argument may hit you harder if you've been trading through persistent volatility, stop-and-go rallies, and a peculiar sense of momentum fading. Pal approaches this from a macro sequencing perspective, not market intuition. This cycle's slowness doesn't surprise him. Our business cycle is in its trough due to post-COVID rate dynamics. Not until 2025 to 2026 will debt refinancing, fiscal stimulus, and global synchronized easing increase liquidity. Scott Bessent, U.S. Treasury Secretary, agrees. Main Street lacks liquidity. Early, not late, makes markets messy. Pal's question isn't whether the bull market is over, so why would it start without the liquidity wave? That foundation leads into his following statement.
Revealed for a lot of assets where an organic bid materialized, and my paranoia in those wicks is, do we have to go back to those wicks, right? And some of those wicks suggest, bear market levels of where, especially in the long tail.
Yeah, I mean, it depends which wick, because if you use the Binance wick, that's pretty bad. If it's the Coinbase wick, I mean, a lot of these are going back to that right now as we speak.
100%. And so, that's another piece of nuance within this. And then there's other things like you mentioned Binance and Coinbase. So the Coinbase premium has evaporated here, right? So Coinbase coins tend to be trading at a discount right now to Binance, which tells us the US bid isn't there in the way that it once was. We're starting to see some of these really aggressively priced venture deals, even though there's not really a venture bubble in crypto.
Chris, just to go back 1 second about that, the flash crash liquidation event, who really got damaged there? Because somebody got really damaged in all of that, but it's not clear who, because most US aren't highly levered, they're not using Binance.
Yeah.
People obviously got liquidated, but where was the real damage in that?
I think we're still yet to find out, right? There have been, I don't want to propagate rumors. I'm sure we've all seen the rumors on crypto Twitter, and I don't have any definitive information, but there's certainly questions being asked of certain market makers.
Did it hurt retail? Or did retail just kind of watch it in horror? I mean, that's what I'm kind of thinking. Have we done something some psychological damage to people? Or was it just an observational, what the hell just happened, like the flash crash in equities back in 2016 or whatever it was?
Yeah, I think there was some damage done to anyone who was levered, right? And especially if you were levered according to Binance prices, right? There's for sure damage there. And so that would be some retail participants. But I think probably the more important damage is there was already a pause in the long tail bid, and I think it just gives further pause to the long tail bid, right? Because all of a sudden, even if there's this discrepancy between exchange pricings, people are asking where's the bid in the long tail, and then there's this, calamitous event that shows some of these horrendous wicks, and it really does cause people to say, well, is that where the organic bid is? And so I think that's the psychological damage.
And another thing that you raised, which I think was an important point and not widely understood, is you kind of suggested maybe there's a sort of mimetic reflexivity to the idea that it's the 4-year cycle, stupid. So everyone just makes it happen. You kind of manifest it via hyperstition.
Yeah, and this is such a tricky one. I try and go with, hey, this time isn't different until there's a strong enough reason for it to be different, right? And we see that play out in all kinds of ways, right? And the reason things are never different is because human nature never changes, right? And you and I know that well. There are a lot of reasons for this time to be different, though, right? Like there's sweeping legislative action and regulatory clarity in the U.S. There's major traditional finance and traditional tech embracing of stablecoins and blockchain technology. There's ETFs in the market for the majors for the first time. You know, liquidity is coming our way. So there's a lot to suggest that, you know, we could turn a corner here. And I'm prepared for what it's worth. Like BTC right now is 98. ETH is just above 3K. Sol's 140. You know, I'm prepared for things to turn around from here. It's possible.
Yeah, because remember 2021 was a wild one for that. I mean, BTC went down 50% and then straight back up. I mean, that was not easy.
Yeah, and so like here you're looking at BTC down 20% from its highs, ETH already down about 40% from its highs, and depends on which high you want to use for Sol, but from the December 24 high, you know, Sol's down about 50%, right? I could see that being enough of a washout. I could see that if we rally from here, I could see that being very painful for a lot of people, right? And this again is like one of my fears that I see on crypto Twitter is it's so all or nothing. It's so like full port, 100% in, you know, all systems go, versus, you know, I shared this thing, you know, a month or so ago of, hey, I'm about, you know, 39% cash, right? 61% long capitalism. And there's a basket of assets that goes into capitalism, and crypto assets are part of that for sure. But so like, I'm still majority long capitalism, and I basically always want to be majority long capitalism because capitalism is designed to grow capital, right? And then, you know, you incrementally raise cash when times are good, and then when prices get interesting enough, you deploy that cash. And, you know, right now, money market funds yield more than inflation costs, and so, you know, accruing bit by bit some purchasing power. It's nothing, you know, special, but I would really encourage people listening to this call, if they're really agonized about the current situation, to think of it kind of more probabilistically and more piecemeal.
But Chris, I think the issue is look, you had a very good entry on your positions.
Yeah.
And therefore your ability to take money off the table, considering Solana didn't go to new all-time highs. I mean, this would be, I would put it in the paranoia bucket for this case, is like we had no new highs in everything except Bitcoin. And it pretty much the whole space topped in January. That's weird for this year. But the issue is people don't have any real significant gains because most people never buy the lows, right? That's, you know, we both were pounding the table back in the lows, but most people haven't bought the lows. So they buy sometime in 2023 or 4 and they're not up. They're flat.
Yeah.
And that's really hard psychologically to take chips off the table when you're flat and all your hopes and dreams are in this trade. So I can see why everybody's agonizing because it's difficult.
Yeah. You know, and people will discount, you know, at least me for having venture entries, but a lot of my entries are public market entries alongside everyone else.
Yeah, your Solana was, you know, fantastic. And that was a public entry and done publicly in front of everybody.
Yeah. And then, you know, I think, you know, for anyone that I'm helping on a personal basis enter crypto assets, I just always tell them if they come out flat in their first cycle, that's a win, because they learn so much in that process and they go through the agonizing volatility. And so if someone is, you know, flat and having learned a ton, then that's a win. And that's really how I would think about it. Now, you know, if they're flat at these levels, you know, I can see how that would be difficult, you know, and one framework I've been encouraging people to use, and these are just friends. You know.
Both analysts analyze the same market, data, and price activity, but reach different conclusions. Burniske thinks the market has spoken. Early exuberance, ETF front run, 10-10 liquidation, long tail weakness, a cycle terminated early. Internal market structure, falling marginal buyers, and the fact that crypto hasn't performed like 2017 or 2021 are the arguments. He views caution as adaptability, not pessimism. However, Pal's thesis relies on macro inevitability. If liquidity cycles drive every big asset run and the global liquidity expansion hasn't begun, the bull market must continue. His model claims the peak is yet ahead. We may be 2 years past the halving window. In his view, 2024-2025 was the warm-up. 2026 is the major event. Thus, both sides count. Currently, structural weakness exists. It's unusual for liquidity and prices to drop. Most assets feel heavy. However, a global easing cycle, a debt rollover wall, and institutional trains from stablecoins to tokenized assets to ETFs are emerging. No need to choose now. Understanding market dynamics in both directions is crucial. I want to hear from you when we conclude. Is the banana zone ahead, or have we passed it without recognizing it? Comment your thoughts. If this analysis helped, please like the video, subscribe to the channel, and share it with someone seeking to understand the cycle. Thank you for watching, and see you next time.